Okay, this follows the segment where I shared with you that had you been able to put $95 a month away, starting at age 20 until you were 65 years old, and possibly earned a crazy amount of 10% on average over that time frame, that you could be worth $1 million if that had occurred. So again, I was trying to accentuate time. Time value of money is very, very important. But the rate of return, of course, is very important. And so during class one day, I was sharing this with my students, and one of my students said, "But Pat, how can we possibly expect to earn 10% on our money?" So while I'm making this video at the end of 2017, and it has been a very good year in the market, I would like to show you some funds from Fidelity. Now, please understand that I'm not promoting a particular company. I happen to have money in Fidelity and Vanguard and TIAA-CREF. I've got a little bit of stock. I'm a relatively conservative investor, but I do work with several different companies, and again, not advocating. Partly it has to do with my workplace and where I can put my money in terms of 403Bs and 401Ks. So this first fund that I bring up is Fidelity's 500 Index Fund account. And what I'd like you to notice is middle of the page to the right side in green, it shows you 5 percentages. The first one says the year-to-date daily earnings on this 500 Index Fund premium class account from Fidelity has been 17.24%. That's been my annual rate of return on this holding since January 1st. Look to the right of that. For 1 year, so this recording was made on November 20th, 2017. So since November 20th, 2016, 1 year ago, this account has earned 23.59%. Jump to the right of that. An average over 3 years for this fund, 10.74%. 5 years, 15.13%. And the only reason that it's down to 7.48% over 10 years is because we suffered a dramatic downturn in the market in 2008 into early 2009. And many of us lost, upwards of 40% of our account values. So even with that, over the last 10 years, this fund has averaged about 7.5%. Let me show you another one. Again, I just decided to pick a few. This one's, I think, is a growth fund. And let's look at the summary. So again, look to the middle of the page, year-to-date, 34.46%. For the last solid year, 40.24%. And if you look to the right, 3 years, 16.07, 5 years, 19.73, and over the 10-year period, including that downturn time. Look here, I forgot to show you this on the last one. This particular fund, called a growth fund, has 35%. Yeah, 35%. Look at the bottom right corner. Top 10 holdings in this fund include NVIDIA Corporation. How about Apple, Amazon? I'm seeing Alphabet. Oh, that's Google. Facebook, Adidas, Microsoft Corporation, Tesla. So 35% of this fund's holdings are in those stocks. So please know that when you purchase or put money in a fund, it's got some qualifications or it's designed for some particular focus. So again, this is a growth focus. Even look to, let's see, expenses. Left side of this page, it can show you overall ratings, kind of the risk of this fund, and the relatively speaking, the expenses to invest in this fund. Let's look at something that's a little bit more conservative, because I'm closer to retirement. Oops, didn't mean that. Let's go back here again. This is a bond fund. And again, because I am nearing retirement, I have to be sure that a certain portion of my investment accounts, let's see if I can get rid of this, are invested in a less risky way, if you will. My choice of words is probably not the greatest, but A total bond fund is going to earn much less, as you can see. But look at the risk in the center of the screen. Look at the risk of this category, and do you see the arrowhead in the green area? It has low risk. So again, at my age, I have to invest a little bit like this, but even over the 10 years, this account earned 5%. And then finally, let's look at one more. Again, one of the accounts that I hold, look at their top 10 holdings. So Apple, Amazon, Ubisoft, Entertainment, Tesla, Facebook. Boy, we're seeing some. That's 46.72% of this portfolio. It's interesting that I'm pulling up some that are having similar companies as in terms of the stocks that they hold. Again, look at the year to date, 37.24%, 1 year, 38.9%. Look at to the far right, 10 years, this account earned 11.13% on average. So I share this with you because while I don't have data for myself over my last, let's say, 35 years of investing, I'm willing to wager that probably I have earned close to 10% on average. And, over as I've aged, I increase the amount that I put into. So, I don't just put the $95 a month. I put in more. So know that it can be done. And I'm just trying to share with you that there are ways to go out there and seek those kinds of returns. They're not savings accounts. That's a poor place to hide your money. And so what you do is you get online, Fidelity.com, Vanguard.com, and you call the 800 number, and they help you through everything.